All right. Team. Can everyone hear me? Let me check. Can everyone hear me? Hello. Let me see. How is everyone doing? Bankroll Sahara. Come on, let's go. Rocks. How are you doing, Terry? Great to see you. JB, love to see it. We can hear you. Perfect. From Switzerland. Don't make me jealous, Lorenzo. Come on. No, beautiful country, Switzerland. Beautiful country. Absolutely love it. From Poland. Oi. MMT represent. Come on. Love to see it. From Austria. Kenya. Of course. South Africa. How can we miss it? Always South Africa. Belgium. The South neighbors. Spain. Oi. Germany. Chile. Wow, that is crazy. From every single country. It keeps surprising me every single time. Latvia, Nigeria, UK, USA, India, Afghanistan, Algeria, Argentina. Oh, I'm actually looking to visit Argentina really soon. What is the place called? I keep forgetting the name. It's a bit in the south, actually. Argentina. I'm in your backyard. What? No. Just checked. You're not. Okay. IRL. All right, perfect. Let's start. It's my catchphrase, right? All right, perfect. Every time I have to start talking, it's all right, perfect. Every time I have to end, it's all right, perfect. MMT from Canada. Love to see it. Absolutely love to see it. I'm ranked top 20 on the Fund the Trader January competition because of you with 5 days left in the competition. Thank you. That is insane. Let me take a quick thing of that. Let me see. That is crazy. And that's all your hard work, my friend. All your hard work. That is crazy. Congrats. What's up, Brad? I took my first trade of the year last week as well. It was a win on EU. Let's go. Love to see it. Yeah, also took my first 2 trades actually this week. Both winners. Love to see it. Let's see. However, for me this week was not high probability. Dollar was doing the helicopter pattern. I like that one. I took 1 trade and was a loss. How many trades you took this week? I took 2 trades and I agree with you. To be honest, for me, I'm also quite surprised that I actually took 2 trades because the dollar is just not super high probability in itself. It is in seek and destroy conditions as well. How I go about it is exactly what we will talk about as well. Let me see. Yo, bro, are you a millionaire? Not yet, my friend, not yet. Soon, hopefully. No, I'm not sure. Let me see. Morocco is also, of course, Morocco. Of course. Or it's the best. I've been watching you for a long time from France. Love to see it. I used to always go to the coast in France. Lovely. You had great churros there. That's what I remember. I like it a lot. I live beside your girlfriend's house. Oh, yo. Then you also live beside me, my man. So you're my neighbor. Damn, that's crazy. I didn't know you lived there. That's crazy, my friend. Hey, what's up, Phil? How you doing? Dollar should go up to the next backup on the weekly. It's exactly my thoughts as well. If you're based in Colombia, are you from Colombia and speak Spanish? No, I'm not from Colombia. No. I am from the Netherlands. I speak Dutch, English, a little bit of Spanish, but I'm still working on it. The king of FVG. I like that spam. It's a good spam. Thank you, Fazal. Thank you, my brother. I'm rewatching the A to Z series again. It's a great one. It's really a good one. To be honest, always good to rewatch that. All right, let's go over the dollar first right here in our forecast, and then afterwards you can ask any question you want. Of course, I'll try to go over every single question. Did you watch Warriors and Lakers? I did hear it was overtime. Did not fully watch it myself though. I'll go over everything, or I try to go over everything. The chat, as you can notice, can be quite chaotic as well. So if I miss your question, it's not personal. Don't worry. I'll try to do my best. All right, let's see on the dollar. Of course, I actually put out a thread on Twitter on the way I actually do these weekly outlooks, and it's mainly two steps, right? It's bias, first the direction, and then I just check how can we deliver towards that bias. So for example, I start on the monthly right there. And on the monthly, we can clearly see right now, we have a nice monthly fair value gap sitting right there, which initially was a breakaway gap. Again, that full thought process was, yes, that is a breakaway gap, but the lower time frame below the monthly still needs to support the idea of that actually being a breakaway gap. So if the monthly still tells us, if the time frames below the monthly still tell us we are going to trade into that breakaway gap, then it doesn't matter, right? Then it's not relevant anymore that it is a breakaway gap. So right here, if we go into the weekly, how can we now deliver towards that monthly value potentially? Because clearly, very simply said, where has this candle been heading? Bullish. Where can the next candle potentially head towards? Bullish price action. Where the next candle, first target, in about 3 days, first target would be the previous month's high right there. Seeing how we reject, after that is the monthly fair value gap. There's the two premium arrays that we have here on the monthly time frame. Then, on the weekly, let's see. On the weekly, we have a weekly fair value gap sitting right there. A very small one, extremely small fair value gap. Now, that weekly, this is one of those cases where this is actually something we discuss in the money making team. I've not discussed this on YouTube in general, but you have breakaway gaps and you have variation breakaway gaps. This is one of those variation breakaway gaps where that fair value gap is not necessarily something I would want to see price trade back towards. If we do trade back towards that fair value gap, I would expect lower prices. Same for this fair value gap right there. Now, then if we don't have a clear narrative, if we don't have a clear PD rate we can head higher from on the weekly, then what do? We go into the daily time frame. And on the daily time frame, what do we see? On the daily time frame, we see this fair value gap sitting right there. We mentioned the overlapping part last week and the weeks before that as well. We came into it, we tried to push higher right there, and we swept this high instead of closing above it. Now, this is where external and internal liquidity comes in, which is something we can touch on next week as well. This is where you need to differentiate a run between a sweep of liquidity. The sweep we already went over in the previous video, but you need to be able to understand what a run is. The run is just the exact opposite of a sweep then, of course. So right here, if we go into the 4 hour actually, which is not necessarily something I would do on my Sunday weekly forecast, but it will give you a great indication here of what I'm talking about. Because we are in seek and destroy conditions. And how can we know that? We can know we are in seek and destroy conditions by this fair value gap right there not holding. All right, if that bullish fair value gap is not holding, not getting respected, not pushing price higher again with a new fair value gap, perfect. Then we can just continue lower, right? So what can we do? We can continue lower off of this fair value gap right there. All right, we don't continue lower off of that fair value gap. That is the indication after those two, a bullish fair value gap and a bearish fair value gap right there, are both not respected, both don't follow through. That is the indication that we are in seek and destroy conditions. So when we are in seek and destroy conditions, you simply want to stay out of the market. And when you do get an opportunity, you want it to be a very small opportunity, as in target something very close to current price action. For example, right here, when you trade off of this 4 hour value gap right there, you do not want to aim for the highs right there, simply because we are in seek and destroy. So it's not reasonable for price to reach that. But this swing high is a little bit more reasonable because it's close to price action. So make sure your trades are just not that huge. You're not aiming for the moon. That's very important. So in here as well, don't force any trade, lower your risk. All things that are, of course, quite important to understand. So what do we do actually? Well, the best thing to do here is wait for a displacement out of the consolidation. What does that mean? Wait for a fair value gap above this area right there or below this area. Can be on the 4 hour, perfectly fine. And then afterwards, once we have a fair value gap above the area, the consolidation area becomes what? That becomes your fair value area as well. So we should just respect that to continue higher off of that. If we do want to do that, and if we want to continue higher towards the monthly fair value gap sitting right there. That monthly fair value gap eventually, with the new month as well approaching, new monthly candle, can do something like this to then continue lower off of that. So that could also be quite interesting. If we get that price action, of course, we have to react, we have to adapt, but that could be very, very interesting. So that's mainly what I'm waiting for here on the dollar. We're on ES, and if we look at in general at the indices, ES right here has been quite strong. Even though the dollar has been trying to push higher a little bit, ES isn't really pushing lower. We still have the all-time high sitting right there as well, which I definitely think we can reach for overall here on ES. So how can we deliver towards that all-time high? We are bullish. All right, what kind of discount array is sitting right here that we can push higher from? If we are going higher, where are we going higher from? Monthly fair value gap right there. Well, that monthly fair value gap is quite low, right? It's quite a low fair value gap. If we trade back into it, all right, I would still expect higher prices. But it's quite a heavy retracement for price to make before it reaches the drawn liquidity. So the question is, drawn liquidity first or fair value gap first? I would argue drawn liquidity first. So on the weekly, do we have something? On the weekly, we already have this fair value gap right there that we can push higher from. So then the question again becomes, drawn liquidity first or fair value gap first? This fair value gap is already a little bit more reasonable, but the way this candle closed right there is not super reasonable for the next candle to then come into that, to then continue higher off of that immediately. No, we can potentially trade towards it if the signs are there. That could definitely be the case. On the daily right here, what are we seeing? Well, this is where it does become quite interesting because we simply don't have a daily fair value gap higher right there. The last daily fair value gap is overlapping with the weekly fair value gap as well. So this is where I would almost say, all right, well, this is a breakaway gap, but it could be a very nice magnet unless we already get fair value gaps higher right here. So on the 4 hour, let's quickly check as well. 4 hour consolidating. So this could definitely be something like this to then continue higher off of that. On NASDAQ, let's see. NASDAQ is quite interesting, and let me delete every single thing here. We are at all-time highs right there, and we are currently sweeping it. Now, we can still continue higher off of this, off of the all-time highs after reaching the liquidity right there. This is where now it's important to understand the difference between a run and a sweep of liquidity. Where if we are running that liquidity right now, and with, again, running liquidity means that we take liquidity, but instead of moving the opposite direction, we just continue higher and we sort of move higher right there. We are running the liquidity instead. So right there, if we want to continue higher, then where are we continuing higher from? Well, we have a beautiful weekly fair value gap sitting right there, which currently we are sweeping that all-time high. So we need to be careful that we do not go into the 1 minute time frame of that weekly fair value gap right there and then try to trade off of it. No, because there's a lot of momentum coming off that all-time high, continuing lower right there. It's very important. So here, off of that weekly fair value gap right there, that is definitely my first draw on liquidity heading into this week, which is beautifully seen actually on the daily time frame. Because on the daily time frame, we simply said did not create any daily fair value gap higher. We can now target this liquidity sitting right there, which is just, again, the high of that weekly fair value gap. So this is also very interesting at the beginning of the week to look for shorts. So for example, on the 1 hour right here, we had this 1 hour fair value gap right there. New 1 hour fair value gap right there, continuing lower, could be very nice to then target the weekly fair value gap and then see, all right, do we want to continue higher off the weekly value gap or are we still continuing lower? That's very important. But the first drawn liquidity, in my opinion, is quite clear right here. Then if we move on to YM, let's see. YM also reached all-time highs, of course. This is again sweeping the all-time highs, where this is the indices I do want to trade are ES and NASDAQ, where I currently prefer NASDAQ. YM is not too clear to me because we're just constantly sweeping that all-time high, then making a reversal right there. So here I do not necessarily want to be actively involved in YM right here. If we do want to continue higher, then we can look to continue higher, potentially the 4 hour fair value gap. But the way that third candle formed right there when the fair value gap was created, it's not that great, right? It's a lot of momentum, sweep of the high again, respecting a premium rate to then come into the fair value gap. not super interesting right here in my opinion. So what I do in this case, and when I'm not too sure on what it wants to do, I simply wait and I simply demand a new fair value gap off of price. So a new daily fair value gap would be great here to get an indication of what it wants to do. Or go into the lower time frames to see where the 1 hour is guiding you. For example, this right here is what? This indicates a sweep that we talked about actually in the previous video. So at this stage, I would argue that we can actually look to continue lower as well. All right, on DAX right here. On DAX, let's see. On the 4 hour, we can simply look to continue higher as well towards those new highs. We reached the first target last week, which we had determined right there. That becomes a fair value area with the fair value gap as well on the 4 hour, which we came into. We can continue higher off of that. After, what do we see? We have a new fair value area, which is this high right there. You can refine a little bit to this high right there because the wicks are not overlapping. Let me see, is this wick overlapping? Yes. So this wick right there with that fair value gap, that could be very nice to continue higher off of as well. Then look at the daily. Daily, I would prefer the 4 hour in this case right here. Looking at Australian dollar, US dollar. This has been consolidating, as you can clearly see on the daily time frame. So we can go into the monthly where we are coming off that monthly value gap right there. But other than that, it's not super interesting because it just simply hasn't been moving a lot. Weekly, we have a weekly fair value gap sitting right there. And although I do have to say the weekly right here is quite interesting. And the reason being for that is simply said because this is the same formation that we had actually a few weeks earlier. This formation right here. Where we mentioned if price wants to continue lower or if price wants to continue higher, then this is not a bottom in the market. So if price wants to continue higher, it's definitely going to head for that low first, where currently this is the exact same formation right there, where the only thing that is different that we are now coming off a monthly value gap. So it's, you have to take that into account, of course. That is a little bit lower probability overall to look for shorts, but this is still a nice target in my opinion with a weekly value gap right there as well. So currently we can see we are in the middle. If we reach for these lows first right there, then if we sweep those lows, we can target the weekly value gap right there. If we come off of the weekly value gap first right there, then we can potentially look to target the lows if we get the right confirmation, of course. So here could be interesting as long as you don't get caught up in this price action right now. Just wait. You wait for displacement out of the consolidation. That is very, very important. All right, then looking at Euro US dollar right here, which is just basically, of course, the dollar itself, monthly value gap right there, which we can potentially trade into. We have to see what the dollar overall wants to do as well. Then right here on the weekly, not too clear, as in we don't really have anything clear to guide us towards the monthly value gap. Daily was quite clear, as in we had the overlapping fair value gap right there with the breaker block as well. After that, we did not create a new daily fair value gap. And on the 4 hour, again, we went into that seek and destroy conditions right there. So what do we want to do right here? Exact same thing as we want to do on the dollar. We simply want to wait for either displacement out of the consolidation, going lower or going higher right there. That is very important. That is the most crucial part right here that we want to wait for. Then if we take a look at GU, same exact thing. I do not want to trade this at the beginning of the week. This is just not high probability at all. And GU hasn't been high probability at all for the past few weeks. I would argue since the beginning of January, it hasn't been high probability at all. Not really been tradable right there. So also don't want to do anything right here on GU. Also want to wait for fair value gaps going higher or fair value gaps going lower. Whenever in doubt, just wait for fair value gaps. Then looking at New Zealand dollar, US dollar right here. Let's see. Now this is already a little bit more interesting, although it's still just not super clear. And I'll tell you why right here. Monthly value gap, which we can potentially look to continue higher off of. But if we want to disrespect that, then of course we can expect lower prices. On the weekly right here, we have a weekly value gap sitting right there, which could be interesting as a magnet, as a rocket as well. And after that, on the daily time frame, we are already continuing lower right now, and we are potentially creating a daily VWAP lower. Overall, this as well has been consolidating. There's some movement on that Friday, but is it super interesting? No. I would still want to wait right here to see if we get some confirmation going higher or confirmation going lower. We have to take into account we are in a monthly fair value gap. That is very important as well. This is the first rejection when we are coming off of any fair value gap in general. You'll see one rejection. And after that rejection, a new fair value gap will be created. That new fair value gap is high probability. Playing the rejection is not necessarily super high probability, but after the rejection right here, the rejection happens, the retracement right there with the two bullish up candles. If you get a new fair value gap lower, that's high probability. If you get a new fair value gap higher, that's high probability because the rejection is done right there. Then if we take a look at US dollar, Canadian dollar. Now, if the dollar wants to continue higher, this can be quite interesting, but we still need to wait for a new fair value gap right here. I was still waiting all this time for a new daily fair value gap, which in the meantime, nothing else happened. And we can see once we failed to create a new daily fair value gap higher, actually, we then targeted this low right there, which is also quite interesting. It's what we call unusual context to then usual context. On the 4 hour, we can then look to continue lower off of that. But overall, I would want to wait still for new fair value gaps going higher or going lower right here, where we're still rejecting off of that order block. But the thing here is as well that we are not continuing lower off that order block because it already tried to reject twice. So why is it not continuing lower? So eventually it could potentially as well continue higher and follow the dollar right there. That could be quite interesting. The thing I would want to see right there is a new daily fair value gap higher though. That is what I would want to see to continue higher off of that. US dollar CHF, let's see. US dollar CHF creating a weekly fair value gap, which is actually quite interesting because then we have a sharp turn after what? After sweeping this liquidity right there. So if we come into that, we can potentially look to continue higher off that. That could actually be quite interesting right here. I really like this, quite like this. US dollar JPY, let's see. On the monthly, we can just look to potentially continue higher as well. Reach the first target as in the previous month's high right there. And on the weekly, where can we continue higher from? Weekly fair value gap. Now that weekly fair value gap is quite interesting to me. And the reason why is because the weekly fair value gap is overlapping with a daily overlapping part right there, which we are not continuing higher off that first fair value gap. That second fair value gap right there is the exact same as the first one. So either we already continue higher with a new daily fair value gap. All right, then ignore what I said and we continue higher off the daily fair value gap that was already created right there. But in the meantime, I would want to wait for the overlapping part or again, a new daily fair value gap higher right there. Still expecting overall some bullish prices right here. Silver. Silver is again, it's a weird relationship that the dollar and silver and gold, etc., that they have. Because whenever the dollar is moving higher or just slowly moving higher, the silver is not really pushing lower, as in it does its own thing. So silver right here, we can see we have a nice sharp turn again in the form of this fair value gap right there. So if we come into that, we can definitely look to continue higher off of that as well, potentially. So on the weekly, if we have some kind of targets, sweeping the lows, monthly, previous month's low that we're sweeping right there. Overall, of course, on silver, we are seeing it's just one big consolidation actually. But on the dollar, or sorry, on the daily right here, what I would want to see is this daily fair value gap right there to continue higher off of that. Then on gold, let's see. On gold, it's quite similar. The only thing is we don't have a daily fair value gap higher, nor do we have a daily fair value gap lower. The last one is this one, and that was too weak to actually push lower right there. So this is not something I would be interested in here on the dollar. I would simply want to wait for new fair value gaps. Then on Bitcoin, okay, this is quite interesting actually. This is quite interesting. This is definitely interesting. Let me delete everything right here. We are coming off of this weekly fair value gap right there, which we mentioned And right now, we also mentioned, all right, if we get a daily fair value gap higher off of that, that could definitely be interesting. What do we see? This is exactly the thing you want to see, where the liquidity sweep we talked about in the previous video is not just a liquidity sweep, it's also an entry pattern, which when we come into a fair value gap, we will also create that if the fair value gap wants to hold. We talked about that first rejection, the first 50-50 area being right there. Afterwards, we create this new sharp turn sitting right there. Perfect. That is absolutely perfect. And that is where we can now look to continue higher from. Where, of course, we also have the breaker sitting right there, which is important to understand because that might prevent price from trading into the fair value gap right there. Very important. So here, this is definitely looking interesting to continue higher overall. Only thing is that we are also creating a month fair value gaps or below, or actually we failed to create that month fair value gap right there. No month fair value gap going higher. Only one is sitting right there. So on the weekly and on the daily, it's definitely looking very, very interesting to continue higher right now off of Bitcoin. Very nice price action actually. Might look at some swing trades. Crude oil right here. Let's see. Crude oil finally delivered into the month fair value gap right there. And off the month fair value gap, it is now waiting for either a rejection or we continue higher right there. So here, this is waiting for the confirmation. Again, could be a sharp turn, right? Continuing lower right there to continue lower because the liquidity right there is quite nice. Definitely looks nice to continue lower, but we have to wait for the right confirmation. So currently it's on the waiting list, just simply waiting as well. Nifty, all right, Nifty. So on Nifty, we have the monthly fair value gap that we are also creating, which in 2 days, we have to take that into account because then the target changes from the weekly right there to the monthly. So the first target would be the monthly, the previous month's low right there. Very important because we can already potentially continue higher off of that. At least get a rejection, very important. So on the weekly right here, the target is not necessarily this anymore, not necessarily that weekly fair value gap anymore. Then on the daily, let's see. On the daily, we had the rejection of the beautiful sharp turn right there, the breaker, continuing lower, daily fair value gap right there, which we can continue lower from towards then the previous month's low right there, which can as well be definitely quite interesting. All right, let's see. Yay, Jay Cuervo, thank you, my man. Thank you, appreciate that. Thank you. Thank you. Let's see. This is my first time to attend. Thanks, Ari. Thank you for being here. Thank you. Welcome. What crosses should we trade this coming week? Well, let me actually check then. Let me go over the economic calendar right here with you as well. Let me see. I can't seem to. All right, let me see. Economic calendar. We have Australian dollar on Monday, Tuesday, Euro, US dollar, Australian dollar, Wednesday, Euro, US dollar, Canadian dollar. All right, GBP a little bit. So what you want to focus on is all the news besides US dollar right there. Those are the crosses you would want to be trading. US dollar news is looking quite nice. Only thing is, of course, that on Friday we have NFP. So avoid that and avoid the Thursday. Then Wednesday we also have, well, I say US dollar is looking quite nice, but that is not necessarily true. Because Wednesday we have FOMC. And that also means that Tuesday and Wednesday are lower probability in general, which is quite interesting because that also explains a lot on why the dollar is actually consolidating, because it's simply waiting for FOMC and NFP right there to make the major move. And the way you can see FOMC and NFP right there is FOMC and NFP will create huge or major swing highs and swing lows in the market. So for example, it really overlaps with the monthly fair value gap right there, which if we want to continue lower, then this right there, FOMC and NFP could create a swing high in that to then continue lower off of that. So that could definitely be quite interesting. The opposite is also true, right? Where we continue lower a little bit and we create a major swing low to continue higher off of that. So that's definitely interesting. To answer your question, for the crosses, something with Euro, Australian dollar, very nice. Canadian dollar as well, quite nice. And GBP, quite nice. Other than that, I would have to see which one are nice exactly. Let me see. Alright, do you have a track record so I can see your win rate? Thanks, man. Yes, for sure, Layman. You can, best thing you can do is reach out to info@ario.io and I can send you my track record. For sure. And by the way, speaking about that, I will also go over the trades actually that I took this week. I took 2 trades. I made around, what is it? Well, money-wise, it was around $25,000 this week. And percentage-wise, it was, what was it? Around 6% this week. So, on the daily right here, on US dollar JPY, let's see. We came into this daily fair value gap right there, which simply said we can just look to continue higher off of. With first target being potentially this high sitting right there. Then, off of that daily fair value gap, the dollar here was also still in quite high probability condition, as in not crazy consolidation, etc. So this was quite interesting. So here, I wanted to go into the 15 minutes right there and look for my very simple entry pattern, which we saw the sharp turn right there. Perfect. After that, we have a new fair value gap higher off of that. Perfect. After that, I enter on the creation of that fair value gap, stop loss below the low, and it was a 1 to 2 for me right there. 1 to 2 right there, around there. And eventually we took quite a while because it was Asia as well, of course, market rollover right there. And then eventually we hit the target right there. And it was nice that it was 1 to 2 actually, because afterwards the market just simply said, went to shit a little bit because it was consolidating afterwards. So that is where we also have to be careful when that happens and price does not follow through. So this was my first trade of the week and of the year, actually, my first trade of the year. Then afterwards, my second trade of the year, which was in the same week, which was this week. On the 4 hour right here, we had a sweep of the lows, sweep of the highs, fair value gap being created right there. And we continued lower off of that fair value gap. Afterwards, this was actually when I created the video on the liquidity sweeps. And we had not reached these lows there. So how are we going to deliver towards those lows? Well, if we are going lower, where are we going lower from? 4 hour value gap, very obvious. So this draw on liquidity was almost so stupidly obvious to me that I did not want to leave the money on the table right there. Although we have to understand, it was seek and destroy, it was a Friday as well, and it was during Asia that I actually executed. Meaning that my risk is a lot lower than on the US dollar JPY trade. So even though it was a winner, we have to understand there's different probabilities in winning trades as well. Same for losing trades, there's different probabilities in every single trade you take. Where this winning trade is definitely lower probability than the US dollar JPY trade. So here on the 4 hour, I went into the 15 minute actually, not into the 5 minute. And we already had every confirmation in the book right there. I opened my chart at that moment in time, right there, executed on it, covering the highs and targeting a 1, 2, 2 sitting right there. Was a little bit higher actually, 1.8, something like that. Because for me, that is in the middle of the night. And I just simply said, want to go to sleep with peace of mind. So I do not want to have a trade running that I need to be stressed about when I'm sleeping. So I wanted to close it quite early. And once we reached that, I just closed it right there. And afterwards, we sweep the lows actually, which was also quite interesting because that gave another entry opportunity right there. Really interesting liquidity sweep. So those are the 2 trades that I took. And the thing I would love for you to take away from that trade, from those trades, is that it's very important to understand the entry pattern right there is really easy. The entry pattern is so easy, but it's the probability you are trading in. That's very important. It's the probability you are trading in. That's what we need to determine. Hello, you said in relativity time that higher time frame are used differently in scalping than in day trading. Could you show us an example, please? Yes. So, for example, the way I go about my filtering process trading plan and my flow trading plan. What you'll see me do in the Sunday weekly forecast, I'll go over more so swing trading potentially, and day trading, not necessarily over scalping, because scalping is a way different approach. Where right here on NASDAQ, let's say we find the weekly Verweil gap right there, which we can continue higher off of. In a filtering process, if you were trading the higher time frame, then you would just stop right there. You would not do anything. But if you're a scalper, this is only where it starts right now. Why is that? Because you found a PD rate that we can trade towards, where you can now go into the daily, into the 4 hour, into the 1 hour right now, and then into the 15 minute as well, to look to trade towards that weekly Verweil gap. So where a filtering process, trading plan, is always going to be focused on you're trading off of the PD rates. A flow trading plan, so scalping trading plan, is where you're also going to trade towards it more so. So that is the difference. It's mainly the difference. Love to see you, my exceptional method. Love that, brother. Love that. Thank you. Thank you. Love that. Let me see. At the 7:16 mark of your order block trading video, how was that little wick overlapping the Verweil gap? It seemed you described overlapping Verweil gap as PD rate, make the range of the order block start at open up to the high. I would have to check that, my friend. I would have to check that. What exactly I did right there. I would have to check. How can we determine fast that we are in consolidation? Because I think we have to be in a consolidation for some time to know that. Yeah, this is a great question. And let me go with the dollar. So as you go along in trading, and the more you trade, the more experience you get, the faster you're going to recognize consolidations actually potentially happening. And what I mean by that is that you are going to get burned, absolutely burned, the first few times when you try to trade a consolidation. And then afterwards, the next time it happens, you'll be a little bit faster to recognizing the same situation. And then the next time you'll be even faster and faster and faster. So right here, the first moment, I'll tell you the first moment when I recognized that I did not like price action anymore for that week. And it was after this candle formation right there. At that moment in time, I did not like price action anymore. And I'll tell you why. This right there was indicating for me that this is a potential early sweep of that premium array. Again, this is something we're going to touch on in next videos as well. This is not a run on liquidity. This is a first sign of a sweep on liquidity actually. So right here, once we create the expansion phase going lower, that is weird. That is weird. Why do we have such a beautiful rejection of the daily overlapping part for our Verweil gaps, and then we are creating a bearish Verweil gap, respecting the swing high that we have right there. So we are sweeping that swing high instead of running it. So afterwards, we continue lower, and that right there is an indication, all right, I want to take a step back because this is suspicious price action. This is not interesting. But a general rule of thumb is that if we have one Verweil gap going higher right there, we should continue higher off of that. Then if we don't continue higher off that, all right, it's not a shame, but it is a little bit suspicious. But again, we can just continue lower. All right, then if we create bearish Verweil gaps, we should continue lower off of those. If neither of those get respected, meaning neither of those create a new Verweil gap, so bullish Verweil gap did not create a new bullish Verweil gap continuing higher, bearish Verweil gap did not create a new bearish Verweil gap continuing lower. That is seek and destroy. That is consolidation price action right there on the higher time frame. And that is exactly when you want to stay out of the market. So everything here afterwards is just low probability and is not something you would want to get involved in. That is of course a general rule of thumb. So that is an easy rule to understand when the consolidation actually there. But we need to understand the consolidation already happened a little bit earlier, where the early signs were already after sweeping that high right there. That's very important. So again, through experience, you will recognize it earlier and earlier and earlier. Let me see. Question, how to know whether to go into the lower time frame or still wait for higher time frame to hit an array? Really depends on the trading plan you are also trading. So my question to you would be, are you trading a trading plan where you focus on multiple pairs? Or are you a futures trader, for example, where you only focus on ES or NASDAQ? If that's the case, then you can already go into the lower time frame without the higher time frame levels being hit. If you focus on multiple pairs, then my advice would always be focus first and wait for high time frame levels to be hit, so an array, and then go into the lower time frame, if that makes sense. If that makes sense. Multiple ST leads to consolidation. Yeah, you could argue that. Yeah, for sure. Never actually put it in that way, but yeah, that could be. Yeah, that essentially is true. Yeah, after constantly sweeping high and lows and creating two STs right there. Yeah, essentially, yes. Interesting. Next week, we have FOMC and NFP. I think we can only trade the dollar on Friday after NFP. What is your opinion for trading the dollar? Yes, exactly my thoughts as well. If you are trading, then make sure it's a very short trade, and short as in a short time period, or you need to be a swing trader and your stop loss needs to be in a safe place where you are not getting slipped essentially by FOMC or NFP. And the best time to trade is indeed after NFP on Friday. So it's one of those weeks where it's a lot of waiting, but that week, if you can sacrifice that 1 week, that will set up again for potentially very high probability conditions going into the next week, where it's the drawn liquidity becomes quite obvious after a week like this. So that's also very important. Let me see. Let's take a look at dollar and NG chart. The correlation since October on the monthly both come into monthly value gaps and create high probability new monthly value gaps. Let's see. NG. Which one is NG again? Ah, okay, natural gas. Yeah, for sure. Let's see. On the monthly, yeah, exactly. Oh, let's see. Do I have some kind of contract right there? I do. Not sure if that matters a lot. Let me see. The context changes. The context changes so much. That's why I'm sort of switching between it, because it's like, all right, this is a whole different story than what we have if we do turn on the contract right there. So I'm not sure what the current contract is as well on natural gas. But anyway, if we look at this, then I would say, all right, we are definitely continuing lower, and that's actually quite nice price action overall. But if we look at this situation right here, then it's a little bit different, because I would argue here that we might actually want to continue higher for a while. So it's a whole different situation, but I do see the correlation as well on the dollar. Yeah, that's quite interesting right here. And the dollar definitely will be quite interesting what we do overall here on the dollar, because we still have, let's see, actually on the 12-month time frame, the yearly time frame, nice yearly vergap as well. Only thing is that we do have order blocks preventing us potentially from coming into that yearly vergap gap. So let's see, this month vergap gap will determine a lot right there. Will determine a lot on what we want to do. That's not NG. Wait, what is NG then? Which NG are you talking about? Yes, for sure, Abizar. This FEG shows reversal sign, for sure, 100%. For intraday, should we look for vergap gap in 15 minutes? Yes, ideally yes. 15 minutes is a very nice vergap gap, very nice. Does your mentorship teach everything from A to Z on everything you know? Yes, everything I know is discussed in the mentorship. And again, the difference between the YouTube then is more so the implementation. It's not necessarily, the knowledge is a lot on YouTube as well, but the implementation is just a shortcut overall, the mentorship, to understanding it better. But yes, for sure. Is inverse vergap gap in institutional order flow entry drill this concept? No, institutional order flow entry drill is when we have a small sting into a vergap gap, continue higher off of, or lower off of that. Inverse vergap gap is a vergap gap, for example, like this. To be honest, you don't need to know those, because very simply said, it's just not super relevant. Not super relevant. Let me see. Hello, Ario. It's K from Algeria. Big respect, my friend. Love to see it. Any tips about trading on red folder news? Yes. Red folder news, you want to avoid NFP, FOMC, and CPI. The rest of red folder news is tradable, either before, during, or after the red folder news. It actually will set up the nice moves. Is your plan waiting after Apple and Microsoft finish earnings next week? I do not trade those, but I can take a look at them. Could be quite interesting. Let me see actually. Apple. Let me see. This is from an old video, I reckon. Interesting. Let me see. Nice monthly revival gap actually, right there. We did already sweep the highs on the weekly, continuing higher right now. Weekly revival gap as well. It's actually quite nice price action here on Apple to continue higher off of that and target the highs first right there. Once we target those highs and reach those highs, it will be interesting to see what we actually do right there. Let's see. Microsoft. Microsoft right here. What are we doing? Just continuing higher. Is this all-time highs? I believe it is. Interesting. Then if we want to continue higher, this is also always quite difficult situation if we are at all-time highs. Because we are either chasing price or we are trying to call top right here, which is neither of those things you want to do. So you want to wait for a big retracement if you do want to get involved, but currently is just waiting until it's done expanding higher. When my schedule does not look the same every day, I have times when unexpected situations appear. I love that. And yeah, essentially that's very true. I can relate to that as well. Very interesting. I have execution issues. What's your advice even when I know where the market is headed? If you know where the market is headed and you have execution issues, then I would argue or I would advise to first use a very wide stop loss. As in, what is a stop loss where you know you are likely not getting taken out? And eventually that will lead to potentially an RR that is not super great, but that RR eventually can be refined a little bit because you know where price has no reason to return anymore. So that's how you would go about it, or at least how I would go about it. See. Oh, I missed the first message, Marina. Let me see. Hey, Ario, maybe you can help me. Everyone speaks about being more disciplined and having a schedule. However, I did not see anyone speaking about full-time moms. What I should do to be more disciplined? Well, I think as a full-time mom in general, you are already incredibly disciplined because you already have so much obligations to take care of. So other than that, how can you be more disciplined? Well, are there certain areas in your life that you feel like you are not keeping your promise to yourself? And what I mean by that, discipline to me is purely, I'm telling myself tonight I am going to do this. Tonight I am going to do a workout. I am going for a 2 mile run. And when I do not do that, I am undisciplined. But when I do that, I am disciplined. And that is just purely how you can be more disciplined. So whatever you are going to say to yourself that you are about to do, actually go ahead and do it. That's how you stay disciplined. And again, that's everything in life. That's small things right there that compounds into trading as well. How much funded capital do you have right now? If you want to answer that, I'll give you an indication. I will not give you the exact amount, but it's close to 7 figures right now. It's in the high 6 figures. Getting very close to 7 figures at least. Let me see. What RR do you generally recommend? 1 to 2 RR. Whenever someone is starting out, 1 to 2 RR, that would be my biggest recommendation. It's a very nice and easy RR as well. Let me see. Besides learning about fair value gaps, what other areas of trading or even trading wisdom would you give for beginner traders to really become a consistent, profitable trader? It's a great question, Nim. It's an absolute, wow, it's a beautiful question. And what I would advise is be able to define things. So to give you an idea, one of my best videos on YouTube, in my opinion, is how to create a trading plan. I go over foundational levels, and being able to define every single level in your trading will exactly tell you how to use the concepts as well. That is very important. So that is what I would advise. And again, yeah, learn from your wins and losses as well. Very important. Exactly. It's as simple as that, but oftentimes very overlooked. And being able to define things, very important. Inversion fair value gap is a strong PD rate, no? I don't agree with that. But again, that's where we might be different in, because I think inversion gaps are just more so random lines on our chart, where if I do something like this and I scroll to the left, then you'll see, oh, look at this perfect resistance right there. Wow, that is insane. Perfect resistance. Maybe perfect resistance. Oh, becoming some support right there. Look at the wick right there. Perfect support. If I now mark out every single fair value gap on my chart on all price action, I create the exact same thing that I just did with that random line on my chart. So inversion fair value gap is sort of a coping mechanism for people to say, oh, but look at my accuracy. All right, but you have 1,000 PD rays on your chart. How can you be accurate with so many PD rays? So again, nothing against you, my friends, but that is just how I look at inversion fair value gaps. It's just something random, where most of the time when I did trade, and again, it's from my experience, right? I did trade inversion fair value gaps as well. And when I traded them, all the time when inversion fair value gaps got respected, it was just either a fair value gap or a breaker or an order block on the right side of our chart. So that's the way I view it. That's the way I view it. What is the difference between SMC and ICT strategy? It's the same. It's the same. ICT is the original quote unquote creator of SMC. Eve buys. Let me see, my friend. Let me see. Eve buys. When I think of Bitcoin, it was looking very nice for buys. So Ethereum right here could be also very nice for buys overall. Let's see. Monthly, I still see it continue higher. Could retrace a little bit though on the weekly right here. Weekly, yeah, I can definitely see it. Daily right here could be quite nice if we have this ST to continue higher off of that. I can definitely see it. Can definitely see it for sure, for sure. For sure. How can we tell if price is overextended? That's difficult. That's difficult. And the thing I would want to tell you right there is, do we even want to tell that? Do we even want to know that? And the way we can know price is overextended is by having a very clear top in the market. So what I mean by that is, here on Nifty, for example, we had all-time highs, just continuing higher. So for a couple of weeks here, I mentioned I can't do anything here. I simply can't do anything here. So then eventually we had a very clear sweep, and the most, even with the ugly gaps on Nifty, we had the clearest sharp turn right there in the world. That is when I would argue, all right, now we can continue lower, price overextended. But until that time, we just simply have to wait. So that is very important. Bank Nifty, of course. Let me see Bank Nifty. Let me see if I'm using the right one. I always forget if it's the right one. Bank Nifty, we were talking about lower price right here, I believe last week. And it seems like that has been playing out quite nicely. Creating ST right there as well. And when we now want to continue lower, then the first target was this right there. And eventually this low as well, right there. So how can we deliver there? Daily fair value gaps continuing lower as well. First one got respected very nicely right there to continue lower off of that. Very nice price action, continue lower. But ST, it's like inversion fair value gap. No, it's not an inversion fair value gap ST. Because we don't use, for an ST, to go over that really quickly, we don't use this fair value gap anymore. As in, this fair value gap is not a fair value gap you trade off of. You trade off of that fair value gap right there, or any PD rate that is sitting right there. This fair value gap is purely to see that there was manipulation. So that is very important. This is purely for manipulation purposes, to trick people into the market and to say, all right, we trick people in the market, we have a bearish fair value gap, now we can continue lower, if that makes sense. So we don't actually use it as an inversion fair value gap, if that makes sense. Let me see. Thank you, you're the best. I'm coming to you. Love that, brother. Love that, love that. Thank you, man. Thank you. Let me see. It's higher time for bias, order block, and lower time for entry with break of structure on M1 and exit on buy side and sells liquidity enough to be profitable, because it's working for now for me. If it's working for you, then who am I to tell you, no, that is not enough? So if anyone tells you, Michael, Michelle, Stepien, if anyone tells you that that is not enough, then they're just lying to your face, and they want to potentially sell you something. Because if you are profitable with that, then keep on doing you, and I don't have anything to tell you in that sense as well. So keep on doing you. Best regards, are so good to see you live. Love to see it, Monica. Thank you, thank you, thank you, thank you. Let's see. How long will it take to get consistency for someone who trade ICT for a year to sign up for your yearly masterclass? I would say FX Journey. I have an average. And on average, there are people coming into the mentorship that after 1 month are funded, consistently profitable all of a sudden because it's just the last thing they needed. There are also people that it takes a little bit longer, but on average, it is 6 months before people come back to me with funded certificates and with payouts, etc. On average, 6 months. So I think that's a nice guideline. But again, don't ingrain that into your mind. As in, if it takes a little bit longer, it takes a little bit longer. But you will be profitable. I can promise you that. That is a promise I can definitely make, that you will be profitable eventually if you stick to it, 100%. Let me see some news about funded friends. Not necessarily. Well, some behind the screen news, but it's not super interesting for everyone here. So no, not really. But we are working on it. I would, you can expect a time frame though. A time frame on when we expect to release is probably in the spring somewhere. So around 2-3 months, something like that. Something like that. Hero, fellow Dutch here. Love to see it. Welcome, welcome. Love to see it. Love it. And BPR, how about that? Yeah, BPR is essentially is also close to a sharp turn, but a BPR is a sharp turn. But a sharp turn doesn't have to be a BPR. So what I mean by that, this sharp turn right here is not a BPR and doesn't have to be. But a sharp turn can also be or a BPR, if that makes sense. But a BPR is definitely great because it's essentially just a sharp turn as well. It shows that manipulation to then the other side. For sure, for sure. Question, when you say we need Verwijgap to indicate price potential direction, you mean Verwijgaps from the current time frame or lower time frame time frames? Current time frame. So ideally a higher time frame, 4 hour, daily, etc. And depending again on your trading plan, if you only trade one pair, one instrument, then it would be lower time frame for Verwijgaps. Do you know any prop firm for crypto? Oof. FTMO is of course steady, but I'm not sure if it's great for crypto, to be honest. Don't really know, to be honest. Don't really know myself. Love that Iron First King. You literally taught me how to trade without indicators. Thank you, my man. Thank you. I like that. Thank you. How to avoid mistaking a pullback to equilibrium for an MSS. Very important what the overall context drawn liquidity is on the higher time frame, etc. What are the PD rates on the higher time frame doing? That's very important. Let me see Tesla. Tesla, always fun to look at. Let me see. Let's see. All right, yeah, we had beautiful right here. Continuation lower actually on the weekly right there. We had this weekly very tiny Verwijgap right there. After we filled and we continue lower of that, then we just drop lower after failing to create or failing to respect those Verwijgaps right there. So right now it would be a matter of, all right, where can we actually continue lower from? So if you're in Tesla, then I would look at next target in the form of this low and potentially even lower after that as well, which can be quite interesting. If you're a holder or you're an investor in Tesla, it's not that interesting, I'm sorry. But again, I might be wrong, but that is what I would look at. Lower prices, first target being this low right there. ST is insane, brother. Be backtesting it since Friday. Love that. How relevant are volume imbalances versus Verwijgaps? Are they treated the same? They are not treated the same. And it's also a reason why I have used volume imbalance. So if you've been following me for a long time, I did use volume imbalance actually. But from experience, I just noticed volume imbalances are just not that strong as Verwijgaps itself. So I always prefer Verwijgaps itself. And yeah, just they're not the same. They're not equally as strong. That makes sense. Let me see. Yes, which video of yours is the how to make a trading plan that you spoke of? of earlier. Let me actually check really quick which video it is. Let me check really quick for you. It is creating a trading plan that prints money, I believe. Creating a trading plan that prints money. Ario, let me see. Yes, this is the one. How to create a trading plan that prints money. That's the video. It's a month ago right there. It's how to create a trading plan that prints money. That's the one. And that is, to be honest, in my opinion, that's the best video I've ever made. Ah, yeah. Thank you, Hope. That's the one. The link right there. To be honest, that's the best video I ever made. Just purely because the details that go into that. It's a, in my opinion, a great video. I'm having trouble in drawing IBDA range. Well, my friend, if you do have trouble, let's look at this from a logical perspective. If you have trouble using IBDA range, then I would advise to not use IBDA range at all. It becomes a lot easier then, because in my opinion, you also don't really need it. Market maker model video too. I can't forget that. True, that's true. Can't forget that. True. True. Are the untraded fair value gaps resting on the left side not relevant anymore? It's a great question. And they are relevant as targets. Something to trade off of? No. Why not? Because it's not part of your current order flow. And order flow is not something I have touched on YouTube. It's something I only go in depth on in the mentorship. I might touch on it briefly on YouTube. But since it's not part of your current order flow, most likely, it is not a relevant fair value gap. So for example, this fair value gap could be a nice target, but it's not necessarily, in first instance, something to go into the lower time frame on to look for lower prices, because it's not part of current order flow. That's very important. Thank you very much. God bless. Thank you, my friend. Thank you. Appreciate that. Thank you. Let me see. Can you review the trade on New Zealand dollar US dollar from the 4-hour re on 25th of January? For sure. Let me see. 25th of January, 4-hour re. 25th of January. Let's see. We have this one right there. Correct me if I'm looking, if I'm not looking at the right prices right here. We have that ST right there, sharp turn. We have the 4-hour value gap, which we can continue lower from. Then ideally, I would want to go into the 5 minutes right there, which has a lot of things going on right there. So if I were to trade this live right there, this could have definitely been a loss overall right there. Which, to be honest, if we build up on this story, I also don't really like this trade. And the reason why is because we're just coming off a monthly value gap right there. Afterwards, we don't really come into any clear primary. Yes, a swing high right there, but monthly value gap right there is quite strong still. So it's just going to be quite 50-50 price action right there, which the higher time frame could be better in that case. But overall, the idea is not the worst, if that makes sense. Bullish re. It was a bullish ST and then a 4-hour re. Ah, my bad. Let me see. Ah, I see right now. This one right here. Yes, this one. My bad. This one. So right here, this higher time frame setup changes it, because this one I would say is quite interesting, definitely. And I'm not sure if it's 25th, this is 24th, so I'm not sure if I'm looking at the right thing right there. But the only thing where I would look at price action right there, or what I would look at, is this move right there. This candle, after this candle, the only thing price action can do is make a new bullish candle. If it does not do that right there, then I do not want to get involved anymore. So either my entry pattern is in this or in the next candle, but once we reach this low, I do not want to get involved anymore right there, because I do not think we're going higher than after that. So on the 5 minutes, let's see, do we have something? Yeah, to be honest, this is a great trade. Nothing wrong with that. Let's see. We had the ST right there, which eventually got respected. Then we had the re right there. Eventually, let's see, which low would you cover? That low is perfectly fine. On the 5 minute, you have a 1 to 2 sitting right there. Eventually, if you want to target higher, can also be done. With this trade, for me, perfectly fine right there. Would be a perfect loss right there. Only thing is potentially the dollar, which was in a weird state overall. That's the only thing. But based on New Zealand dollar, US dollar right here, perfect trade. Would be very happy with that loss, for sure. Is your YouTube library enough to become consistently profitable? For sure, 100%, 100%, 100%. 100%. The mentorship in that case is just a shortcut. It's the implementation side of things where there's literally no confusion. It's just step by step by step by step. Okay, so I forced this trade. Also, the ID was right because I took the trade the next day. The next day, yeah, the next day trade is not something I would want to get involved in anymore. Because then also, we also have a lot of bearish signs, right? We have an ST going against us right there, or at least in the making already. But we already, if we pay attention right there, we are already disrespecting that 4-hour value gap right there, if that makes sense. But the first trade right there would be fine for me. How do you do your weekly outlook in 2 steps? It is bias then narrative. So bias monthly potentially can also be a weekly, whatever you want it to be. Seeing where are we going. So monthly, for example, would be very easily said, all right, on the dollar, we are continuing higher right there. We are continuing higher on this candle. So next candle can also potentially continue higher. Target a premium rate, which is first previous month's high, month for value gap. Second step is narrative. All right, how can we deliver into that? So if we are going higher, where are we going higher from? Weekly, daily, right there. Nothing super clear at this moment. That's the dollar. But if you find a clear PD discount rate, then we can head higher from that. You are the best, Ario, but after Michael. Thank you, thank you. You are the best and all love from India. I've learned a lot from you. Thank you. Thank you, my friend. Thank you. Appreciate that a lot. Thank you. Thank you, thank you. Let me see. Sometimes overlapping FVG are not exactly in the gap, but within the wicks of the value gap. When do you consider the PD rate not to be overlapping or extending out of the value gap, if you understand my question? If I do understand your question, then, and again, correct me if I don't understand it correctly, but ideally I want fair value gaps to be exactly overlapping with whatever PD rate it is, right there. Does not necessarily need to be the wicks right here. It can also be overlapping with the bodies right there, if that makes sense. But other than that, this, for example, fair value gap is overlapping right there as well. That fair value gap is overlapping with this right there. Even though it is a little bit higher in the lag, that's still overlapping right there. So where do 2 points meet of the same or of different PD rates? So this here is a breaker, for example, and the entire breaker is that right there. So the point where it meets is this value gap. So if there's one smallest point where they meet, then that is overlapping. That makes sense. Can meditating help with trading psychology? It can help. Well, meditating helps with understanding your thoughts and controlling your thoughts, as in you don't get the impulse anymore of the emotional reactions. That's where meditation helps with. So yes, it can definitely help. Is the only thing that will help? No, there are also other things where you still need to be able to actually experience that pain in the market, and meditation can help sort of diminish that pain. That's important. Let's see. We need a video on how to pass challenges. Yeah, it's actually where the funded guide on the mentorship comes in, but we can definitely make a video on that actually in the market mastery. It's actually a good idea. Next episode, Tuesday, most likely external and internal liquidity. I'm not sure if I want to do PDRA matrix first or external to internal liquidity. I'm not sure which one I'd want to do first. Do you double down on trades when you're correct? The way I go about my trades is, for example, US dollar JPY was very high probability for me. So initially, if I have an account that is less valuable to me, as in I can afford to sort of take a fat loss on that account, then I just risk more initially. And I determine that purely on the probabilities right there. Purely probabilities. Let me see. Yes, correct, Joseph, correct. It is a breakaway gap, but the lower time frame is not supporting that ID. So then it does not become a breakaway gap anymore. Do you have any video on order flow? Currently on YouTube, I have hints to order flow, as in I tell you how to go about order flow, but in a different manner. On in mentorship, I go about actually order flow. Let me see. High resistance liquidity run versus low resistance liquidity run. That is indeed very important. And I have a video on that. And that video is called no resistance. Fair value gaps plus no resistance equals money. Something like that. Something like that. What is a realistic annual profit percentage? Well, to give you an idea, I made, what was it, 42% last year, around the whole year. That is a very realistic annual profit percentage. And to give you an idea, most hedge funds do not make more than 20% a year. So the best companies in the world do not make more than 20% a year. Let that sink in a little bit as well. And again, I think anywhere from around 30-40%, you are doing amazing. And there are a lot of investors willing to line up to trade with your money. Let me see. How long did it take for you to get to this stage? Long. It took me a long time. And it mainly took me just a lot of losing and a lot of uncertainty of what I should do, etc. That is very important. Just very uncertain on what I should be doing with trading, etc. That's mainly it. So to give you an idea, it took me 4 years currently to get to this stage, but it was 4 years where I was only trading, simply looking at the chart throughout the whole day, trading consistently. That's it. Just studying constantly. That makes sense. Full-time studying, because I also did not do anything besides that. It was full-time studying for me. That's it. Let me see. Exactly. High probability, the more you're willing to risk, makes perfect sense. Exactly. And it's also something, it's important right there to also understand, of course, if you do not have the experience yet to recognize those high probability conditions and to be able to risk more, it's going to be risky in general. As in, you might think it's high probability, but it's just your emotions talking. So eventually, that is something you'll get better at as well. It's very important. What about your funded friends? It's something we're working on. Again, the launch is not close, as in it's probably 2-3 months away, somewhere in the spring, most likely. And that is when we are potentially launching. So that is that's what you can expect as well. More details will, of course, roll out as well. Did you have a mentor on your journey? In the beginning, I had ICT, as in ICT was my mentor at the beginning. And what I mean by that, I learned the basics from ICT. What is an order block? What is a fair value gap? What is a break block? What is a mitigation block? And then afterwards, I took those concepts in my own studying, and that is what allowed me to get the better understanding, if that makes sense. But who introduced me to trading, that was ICT. How about revenge trading and psychology? It's very important. Yes, that is extremely important. And it starts, revenge trading, with too much chart time. Too much chart time leads to revenge trading and over trading in general. Where if you're not using alerts, or you're in general just staring at the chart all day long, you are going to be very susceptible for revenge trading and for over trading. So to avoid that, limit your chart time. Walk away, and actually walk away. So don't have anything on your phone. Don't have anything on your phone or your iPad or whatever. That's very important. That makes him your mentor. I would disagree, my friends, because I am my own mentor, I would argue, because I got myself to a profitable stage, not ICT. ICT learned me the basics. So like you mentioned, he was the mentor in the beginning stages. He learned me the basics, but I got myself to a profitable stage. The concept I'm using, I taught them myself. I learned them myself. So that makes me my own mentor. So I disagree with you, my friends. When will you come back to the Netherlands? I will come back to the Netherlands in March, probably. In March. Not to stay there, but for a period of time. What will be success rate if we trade every 1 hour fair value gap? Probably quite low. And the reason for that is because fair value gaps without any context behind them is just very low probability. So for example, if you trade this fair value gap right there, that's not super high probability right there. So it's not something you would want to trade. It all depends on whatever the context is. Do you add to your winning trades? I risk more on my winning trades, if that makes sense. Well, if I know, or if I expect it to be a winning trade, of course. But to add to your ID, yes. Essentially, yes. How's your basketball going? Are you still playing? No, I'm not playing anymore. I don't have a lot of time anymore, so I'm not playing. No, I'm not playing. Thank you for asking, though. I like that. I like that. Let me see. How many trades you take per month? What is it on average? Could be three, 2 trades, something like that. Let me see. What things are you doing that are allowing you to outperform hedge funds? That's the main thing. It's probably also capital. As in, I'm not trading with millions. So the thing is right there that also allows me to have a better trade frequency. I don't need to go off the higher time frames all the time. So capital is a big factor right there, where hedge funds are having a difficult time to get involved in the first place already. And next to that, maybe it's understanding as well. As in, I believe hedge funds are even more mechanical than I am, not necessarily relying on their intuition or experience only. And maybe that allows me to outperform them. Do I exactly know what allows me? Not sure. But I would guess that is the case. 2-3 trades per month. Does it have to do with you are not trading London sessions at all nowadays? Also, yes, also has to do with that. 2-3 trades per month is, to give you an idea, it's my trading plan. As in, it's the way I designed my current trading plan. Where if I want to trade more, I can definitely do that. But then I would have to sort of change the trading plan a little bit. We have a flow trading plan and a filtering process trading plan in the membership. Filtering process trading plan, you're just going to trade less, but it's a lot higher probability. Flow trading plan, there's going to be a trade opportunity every single day, potentially. So, and it's also what I use to trade, flow trading plan. And currently 2-3 trades per month, because of the fact London session. So you're right. And mainly as well because I'm very picky about my overall trades that I take. Very, very picky. Can you advise something to someone suffering from analysis paralysis? Yes. Define concepts is the most important thing. Analysis paralysis comes from having a lot of concepts but not sure what you're actually doing with them. So are you able to define your steps in trading? Which is where I would advise to go over the how to create a trading plan that prints money YouTube video on my YouTube. That will allow you to then use the concepts in every step of the way. As in, I know where I use concepts for my bias. I know that. I know what concepts I use for my entry pattern. I know that. So there's no room for analysis paralysis, if that makes sense. During your journey, how did you block out opinions of others telling you trading doesn't work? Well, others are always going to have opinions. And for example, I'll give you a great example. On YouTube and putting my face on the internet, putting my knowledge on the internet comes with a lot of hate as well, right? There's a lot of love and everyone here gives me a lot of love, but there's a lot of people that have their own opinions. And usually their own opinions are just insecurities from themselves. So when someone tells me, hey, Aryo, you look like shit, you're ugly. It's someone that thinks they're ugly themselves, because otherwise they wouldn't even think of that fact. So to get to your point right there, when someone tells you trading doesn't work, it's because they can't make it work or they are insecure about making it work. So it's just their own insecurities talking and they would not like you to succeed. So they just imagine if it does work for him. And I am here sitting in my room, not making it work, and he did make it work. That's like, all right, so basically I'm a loser and you're a winner. So it's some insecurity, right? From their side. So that's very important. You're handsome, brother. Thank you, man. Thank you. Oh, I don't mind. It's just funny. But it boils down to simple ignorance. Exactly. It tells a lot about the person itself. And it's difficult because I've also been there in trading where people are just doubtful, or they don't say they're doubtful and they try to support you, but you can just tell they're doubtful. And eventually it's just another motivation to sort of make it work, from my experience. You are there in kind heart, Sora. Thank you. And you too, my friend. You too. Thank you. I appreciate it a lot. Thank you. Do you talk about market maker models in your mentorship? Yes, I do actually. There's actually a tweet that I wanted to tweet out, Stefan. Hate never comes from above. That is very true. Hate is always coming from someone that is below you, doing worse than you, that is in a worse place than you as well. Hate never comes from someone that is doing better than you. Never, never, never. It's very important. Were your parents supporting your trading 4 years non-profitable? Well, I have a lovely mother who is extremely supportive of whatever I do and believes in me a lot, which basically, to say, changed my life, to be honest, and allowed me to experiment with a lot of things in life, which allows me to be in the place that I'm currently am. So I'm very thankful for that. My father also very lovely man, but if we're being honest, less supportive in that fact, less trust factor. But I can also understand that, and the only thing I can do is sort of prove myself. That is very important. So were they supportive? I definitely think they had their doubts. 100% they had their doubts. There needed to be a backup plan for sure. But eventually I made it work. So that's the most important thing. Where are you from? I'm from the Netherlands. Did you seek out the private equity or they found you? Well, it's a funny story. And it leads me back to a time where overall I was looking to skill and capital as well. And I met someone that I had a meeting, or I just was chatting with someone that I already knew, let's put it that way. And that person was actually interested in investing already. And I was telling him what I did, etc. So eventually it just came very natural. I didn't seek for it and it sort of found me, if that makes sense. It was sort of faith almost, where it just came to me. So that's very, very, very funny how that worked. Wat is je persoonlijke win-verlies ratio gemiddeld? En is goed om Nederlandse SMC traders te zien streamen. Let's go. Love that. What is my win-loss ratio on average? It's around 80%. So 80% winners and 20% losers of my trades. 80%. What are your thoughts on breakout and support and resistance trading? Well, I think it's so funny, you know, because SMC in general is sort of this whole cult thing where people, or it used to be like this. When I came into SMC, it was where everyone made fun of support and resistance traders and breakout traders because, ICT mentioned, well, these are uninformed liquidity and everyone just thought they were all idiots. Whilst I have never seen someone making a bigger payout, making more money than breakout and support and resistance traders. So I think they deserve all the respect in the world. And if you can make that work, wow, you are doing absolutely amazing. So yeah, that's mainly it. I have much respect for them. And if you can make that work, then that's insane. It's insane. It requires a lot of mental strength as well. A lot of mental strength. Can we have a daily vlog of Ario's daily life? Maybe in a separate channel. We can do that. Potentially on Instagram, I can shorten it a little bit because my daily life is not super interesting. If I don't go out of the house, I just I wake up, I go behind my screen, I maybe pet my dogs a little bit, give my girlfriend a hug, and then I work. I talk with some people, some meetings, and I work. And then later that day, I do some fitness, do some boxing as well, and that's mainly it. Kickboxing, to be specific. Let's see. With the Essential Plan, I have access to talk to you. No. Essential Plan, you can send me emails, yes, but there's no direct support, if that makes sense, with the Essential Plan. There is also a note system, so I can see your notes that you take actually on every single video in the Essentials and Masterclass, so I can see if you're doing correct, and otherwise I can correct you, steer you in the right direction, but there's no direct access to talk to me, no. See, so how's the food in Colombia? It's amazing. I can't complain. It's really good. Nice, man. I do MMA as well. Love that. Yeah, MMA is very nice. Yeah, I would like to do MMA a little bit more as well, but kickboxing currently is just for me the way to go. Are you a Mike Tyson fan? Of course. Have to be. Have to be. Hey, what's up, Sean? What's up, Sean? Thank you, thank you, thank you. Appreciate that, Sean. Thank you. Love to see it. Love to see it. There are nice women in Colombia, bro. I already have a girlfriend. I'm not allowed to speak. No. There are. Can't lie about that. Can't lie. Have you teach your girlfriend trading? Oh no, that's the last thing I want to do. That's the last thing I want to do, teaching my girlfriend how to trade. No. It's not a good idea. No. I also want to sort of keep the whole business away from family and stuff. I've tried to teach my friends trading, but usually they also, to be honest, they gave up after a week or two. I can also understand that. And I don't know, I felt the obligation to sort of be on their ass constantly, like, hey, we need to do this. It sort of became annoying for both sides, I feel like. So I leave it behind me whenever I'm with friends and family. Let's see. Teach your girlfriend, yeah. How to get a beautiful Dutch girlfriend? How to do the pickup? You have to be quite tall, to be honest, because Dutch people are tall, so you're competing with a lot of tall people. You're competing with a lot of tall people. That's the first thing. You have to be direct as well. You have to be honest. The people in the Netherlands like that. Honesty, directness. Stick to your rules, as in stick to whatever you say you are going to do. Dutch people hate it when you say, I'm going to do this, and you don't do it. So it's very important. Dutch people are very honest, direct people. So the girls also like that. I challenge you to a boxing match. Oh yeah, please, my friend, don't. Please, you'll probably beat my ass. No. Just a trader boxing match. Can you imagine? Would be funny. With 1 to 2 R, 40% is all you need. That's very true. Very true. Very true, actually. Yeah. Alright, how about macro? Macro is in the, what is it? The long-term investing view, more so the news view, is something I personally do not use. And the reason I do not use that is because I have used it in the past. So again, everything I tell here, it's always funny. As in, I'm not telling you it's shit and don't use it. No, it's just my experience that I'm telling, right? So the thing here is that I do not use it because I got confused by it. And the macro view for my day trading didn't really matter, I noticed. As in, if I was to go off the macro news, then I would be so focused on macros that I would not take a trade on the technicals, whilst the technicals just simply play out. So that's very important for me. How old are you? I'm 22 years old, my friends. It's nice to see all your love. Love that, man. Asim, you're a very nice guy. Thank you. You're a very nice human being. Thank you. Thank you. Appreciate it a lot. Let me see. I saw another question. ICT macros. That could also be, yeah. Not macro news, macro time. Yeah, same thing. I don't use that, to be honest. Personally, I don't use that because the way I see macros on the lower time frame is then, all right, I have studied it again, so it's again from my own experience. And the reason why I personally do not use them is because the setup that is going to present at the macro time presents anyway, as in it does not present before that time, meaning that time factor is something I do not need to take into account. So I do not need to be waiting for 8:50, exactly that time spot, in order for me to get involved. No, because the setup will already show itself. So it allows me to have more free energy, which is very important in your psychology. More free energy to focus on your actual emotional state in trading. Very important. So the technicals are always in line with whatever your psychology is doing. Very important. 22 is crazy. Yeah. What can I say? I'm very grateful. Let's put it that way. Yeah, maybe psychology video could be very beneficial in market mastery as well, for sure. Just apply your chart colors, need new ones. Love that. Love that. I always like to see people use the chart colors. I like that. Can we upgrade from essential to masterclass after a month? Yes, you can. You can. The initial fee that is paid initially will be deducted. from that as well. So yes, you can indeed. You can. All right. With that, I am going to end it. I had a lovely chat after. I really enjoyed it as well. And remember what we talked about on dollar, seek and short conditions. Very important. Good luck trading this week. Again, it's not bad to sacrifice a trading week to then the next week have a very clear trading week, right? So keep that in mind. Patience is very, very important. All right. Thank you, everyone. Appreciate you all. Thank you for being here. And see you at the next one. Thank you.